Markets have opened as expected in the red this morning, though the cuts have not been as deep as many had anticipated after the announcement of 25% tariff plus penalty on India starting August 1st by US President Donald Trump. We have our three regular market guests joining us this morning on this very important news day. Rohit Srivastava, founder and market strategist, India Charts, Mohit Gang co-founder and CEO MoneyFront, and Feroze Azeez, joint CEO Anand. Rathi. Gentlemen, thank you so much for being here with us this morning. Rohit, let me begin by asking you, markets were down, the broad indices were down about 0.75% or so when markets opened. Now, some buying action down just about 0.5% from yesterday's close. Were investors prepared for this 25% tariff to come in?
Well, psychologically, probably not, because there was a lot of hope building up that we would get a deal better than 25%. So definitely, if the number getting announced is with no change from what we heard in April, it is sort of a short-term negative surprise. But at the same time, the entire month of July, since the dates got pushed ahead, we've also, taken a back foot on the market on the fear that, will the deal get through? Will it not get through? So the market had priced in some of the pain, but it's always a negative reaction because we also priced in that it would not be as bad as it's sounding right now. But what I also hear this morning, President Trump say that we are still negotiating, which means this is not the final number. This is just what he's put out so that we complete some kind of final negotiation by the 1st of August. So let's see how it goes, I think. But for the time being, it's a knee-jerk reaction is what the market is doing.
Knee-jerk reaction, Feroze, but not as much of a pain as one would have thought it is likely to be this morning. But of course, energy stocks continue to be in focus, especially given the Russian oil import and the penalties that are likely to be imposed on India. And add to that, Iranian imports also coming under Donald Trump's radar. So what are you making of the energy sector this morning?
Kartik, I think, firstly, on the market overall, I personally think that when it comes to a certain news is not important as much as when it comes. When the news comes, if you've already gone through 11 months of time correction and you're about 5.86% below the peak of September 24, then you've already spent 11 months of earnings growth. Last year's earnings growth of Nifty was 11%, reported only 6.5%. With Nifty, NSE reports only 6.5% because of the 4 constituents which changed. So you have got 11% earnings growth of the current 50 constituents of Nifty, 0.1. You've already gone through a 5% of price correction, 5.8%. You've already gone through 11 months of price time correction. And when it comes to trade deal, any new variable, the second part of how a market reacts is if there's a new variable is when you get a knee-jerk reaction. Like when on 7th of April, when Trump said the same thing, Nifty opened almost about 1,600 points lower. That's because a new variable comes. So whenever new variables come is when you get substantive reactions. And markets have already priced in the current situation. And the markets are giving a message that you tell us what the final is, then we will decide. Your bullying tactics or to and fro's of negotiations don't ideally be in the open. This is the first time a trade deal is being discussed so much in the open. So I personally think the markets are sensible and they'll know what negotiating tactics are. And that's what is happening.
All right. And specifically on the energy stocks this morning, given the fact that a new variable of penalty on Russian imports comes in, Feroze, what are you making of that?
I personally think that those, of course, like in the morning, also some sanctions on certain companies were spoken of, 2 were disclosed. I think the energy sector is represented in the form in Nifty about 9.6%, and NSE 500 about 7%. So it's not a main sector, but I personally think you have to be very, very, very careful to be in this sector currently. And I think I would not get into the sector seeing it as buying opportunity because the new variables need to emerge. I think the geopolitical uncertainty on energy sector is one of the most overweighing. So I would not see that as buying opportunity, any correction. And I think oil and gas have had a very bad couple of years in terms of earnings as well, to be more specific.
All right. Mohit Gang, thanks for waiting patiently. I'll come to you in just a minute. But first, again, to Rohit Srivastava, who's on a timer and has to leave. Rohit, in case there is a better deal that India is able to stitch for itself, definitely not by August 1st, but at least in the week of August 25th, when the 6th round of negotiations happen. And if India does get a better deal for itself, what's the kind of upside that investors should brace for if they are looking at these corrections or these dips, whatever you call them, as an opportunity to buy?
So, when you end up pricing in the worst, then anything that, turns positive from there is going to push the markets much higher. If you specifically ask me how much higher, I will say that don't rule out an all-time high in the market as we head into September.
Okay.
Because it will look better than what it looks right now. You have to also put in perspective the positioning. So what really happens when news flow turns positive and then you look at the positioning is that you have the second highest short position in index futures by foreign institutional investors right now. So that sort of is the setup. They've probably sold heavily and hedged heavily into this event. That anything positive would force a lot of short covering. And that is why I'm saying that don't be surprised if, slight positive and you're at an all-time high.
All right. Thank you, Rohit Srivastava, for joining us and with those inputs. But Mohit Gang, let me flip that question to you and say that in case India is not able to stitch up a deal, what is the downside that we are looking at?
Thank you, Kartik. Thank you for having me on the show. But look, I think honestly, the downside is already there for all of us to see on the screen today. So my sense is if we are not able to stitch a deal, I think markets have pretty much factored in. And as I kind of agree with what Feroze said, market has kind of factored it in a time correction, which we have seen over last 1 year. Right. So obviously there are many other factors to it that Indian earnings have not grown substantially and so on and so forth. But I think the lingering thought of a trade deal has kept the market on tenterhooks, and markets always tend to factor in the worst possible scenarios. So on any news from here on can only be add on more positive to the market. And we have seen a lot of taco trade happening across the globe, Kartik. So I'll not be surprised if Trump always chickens out kind of plays again in the market, and we're able to figure out something, some way out of it. And I'm pretty sure that diplomatic channels will work overtime to figure out something. And
Right.
any news from here on can only be positive to my mind.
All right. Well, we don't know whether Trump will chicken out or not, but we know for a fact, Feroze, that Fed Chair Jerome Powell has not chickened out and he has not cut interest rates. And now that is something which is unlikely to augur well again for India's IT sector. And this IT sector, of course, not just quarterly earnings, but for a while now has been under pressure. Is there any recovery in sight? Because investors tend to be losing money on IT stocks day after day.
I think, Kartik, there's a lot of cleansing in the ownership of IT which is happening. There is some degree of unwinding of the whole weights reduction in the passives of IT stocks.
All right.
What happens is if there's underperformance, there is lesser weightage. If there's lesser weightage, more money goes out, then there's more underperformance. That's called the vicious cycle of passive unwinding or passive winding. There's some stock which get the headwind of passive weights reducing. So IT is going through that transformatory ownership change. That's point one.
Okay.
That's why it is 20-25% lower. Our Nifty IT has about 10 stocks. They're lower they've done great earnings last year. They've done about 10.6% earnings. So I think that will turn around. So if you look at Nifty IT over 3-year periods, you will at least see a 4-5% compounded alpha or excess return over Nifty. That's my take. Now coming to the interest rates of the US. US interest rates being higher, to my mind, is a very good thing for sectors which are dependent on dollar depreciation. So what happens is when currency interest rates are different, interest rate parity makes sure that Indian rupee depreciates faster. Now we have had RBI reducing rates. We've brought back repo to almost 5.5 from 6.5 after 2.5 years of lull from June 22. And here the US Fed is not reducing interest rates. So the interest rate parity is favoring the currency of India, which was one of the challenges of rupee depreciation. So I think there is some give, there is some take. Of course, IT as a sector has a weight of about 11.2 in Nifty. So it's a heavyweight sector, more than 10% weight. So what I personally think I would be a contrarian on the IT sector from a 2-3 year perspective on an alpha or excess return basis.
All right, Feroze, thanks for that. Mohit Gang, final question to you. What should be the strategy for investors, retail investors, salaried people who are looking at these corrections in markets right now? Would you now call it that at least all the negative variables are out of the equation and everything has been priced in and this would be the best buy on dip opportunity, or do you still believe that the worst could potentially be yet to come?
Look, Kartik, markets are built on the premise that every quarter you will have new variables coming into market, whether it's geopolitical, whether it's related to macros, you will keep having newer and newer variables. So today, as it looks like, we are pretty much done with the variables, except that the RBI MPC is due, right? So other than that, I think all the variables are out there, factored in pretty much. And it seems like markets have taken the worst in their stride. And perhaps from a retail investor point of view, I sense is we should continue to build their positions, though gradually. I don't think so it's a time to jump on with heavy lump sum investments right now. Perhaps an STP staggered approach is still the best approach in the market. And I continue to believe that this year perhaps might be a year of consolidation where people have to build their positions and then brace up for the next move whenever it happens, whether it be next financial year or maybe a year after that.
All right. Well, let's leave it at that. Mohit Gang, Feroze, Azeez, always a pleasure having you with us here on News 9. Thank you for all your inputs.